very good evening. You're watching The Money Show on ET Now. This is your daily 1 hour long dose of personal finance on television with me, Mrin Agarwal. To kickstart, let's tell you what we have lined up today on the show. If you've been keeping track of the markets and mutual funds, you'll notice that the one theme that seems to be doing very well amidst the mutual fund industry is IT and pharma. Well, correct that. It's two themes that are doing really well. In fact, the IT sector mutual fund, or rather the mutual funds oriented towards IT have rallied 30% in 2020, and those that are oriented towards healthcare have rallied 50%. These are funds that invest only in a certain sector. So, for example, your IT fund will invest only in TCS, Infosys, Mindtree, so on and so forth. Similarly, your healthcare fund will invest only in the likes of a Cipla, Sun Pharma, Aurobindo Pharma, etc. So that's essentially what we call as a category of thematic funds. However, even if these returns do look very enticing and interesting to you, especially if we compare it to the returns given by the rest of the mutual fund industry in 2020, what exactly should you be cautious about before you go around investing in a thematic fund? That's what we'll be discussing today, and of course we'll be getting your questions and queries answered. So do write into us on the Money Show at etnow.tv. Later on the show, we will be talking about the loan restructuring policies that banks have slowly started to release. SBI, HDFC Bank, ICICI Bank, even Canada Bank, in fact, have released their loan recast policies. This is applicable for those individuals who have a loan to repay, but unfortunately are still not able to do so, even after the moratorium period has ended due to the severe cash crunch that COVID-19 has brought about. So that's what we have lined up on today's episode of The Money Show. Like I mentioned before, don't hesitate to write into us on any questions or queries that you may be having with respect to investing, with respect to your mutual fund portfolio on The Money Show at etnow.tv. So for our very first topic, let me introduce on the show Mrin Agarwal of Finsafe. Mrin, always a pleasure having you with us on ET Now and on The Money Show. So just start with, like I mentioned, there's been a great rally in thematic funds like in IT and a pharma specifically. And Mrin, thematic fund outperformance is not something that's new. Even if we, let's say, look at decadal returns, the things that will stand out will be thematic funds. Like, for example, if in 2020 it's IT and pharma, if I have to look at the last 10 years, it'll probably be the consumption space. So it's always very enticing to invest, in these thematic funds. What's your stance on them?
Well, I think they're meant for a certain set of investors and not for everybody. Because when you look at thematic funds or sectoral funds, then in order for it to work, a couple of things need to happen. One, the theme needs to sustain. So right now, because of COVID, there's a lot of interest in pharma stocks. But the whole theme really needs to be able to sustain for a long period of time. And all the companies may or may not necessarily benefit, So, for example, again, in pharma, if you've got companies which have some issues with US FDA and all, so they may not necessarily benefit. Also, what happens sometimes is that the theme might be really good, but the market returns may not follow. And I think this was actually seen in infrastructure many, many years back. I'm talking about 15 years back, where everybody was entering into infrastructure stocks, but it did not actually play out the way it was supposed to. And the fact that a lot of returns might already have happened in this particular theme. So I think what is happening is that a lot of people are looking at the past returns and seeing these fantabulous 30-50% returns and are looking at investing. But it looks to me that a fair part of the value in terms of, the stock market, the stock returns value seems to have already played out as well.
Okay. And yeah, sometimes when we look at things in hindsight, it always sounds or it always looks very rosy. The entire picture looks very rosy. But yeah, like we always say, just because something has done well in the past, it does not mean that it will continue doing well in the future. Vice versa is true as well. If something's constantly been losing in the past, it does not necessarily mean that there's no hope for a recovery over there. You mentioned that it's not for every kind of investor investing in thematic funds. What do you think, though? I mean, what would be the typical characteristic of an investor who you believe is, can afford to take a bet on a thematic fund, according to you?
Firstly, remember that thematic fund investing or sectoral investing means that you're taking a very, very concentrated bet, which means that it could go either way. If it does well, then you probably have the potential to make a lot of money. But then if it doesn't do well, then again you might be in for big losses. And I think again, two examples would be the whole infrastructure run of 2007, and also if you were to go a little bit further back to see what happened in 2000 with the ITES and telecom stocks, right? So they were all going up, and then suddenly we had this huge fall because of various factors, of course. So clearly, this is meant for people who can take high risk. It is meant as a tactical allocation, certainly not for core goals. I would not suggest thematic or sectoral funds. These are at best tactical allocation bets for people who can take really high risk and want to take a concentrated exposure into a particular theme or sector that they think is going to perform well.
Okay. Do you think that, if someone does want to go out and, sort of invest in a thematic fund, for example, if they are really convinced that a particular theme will perform well, just hypothetically speaking, let's assume that I believe that banks will do extremely well from here on, but I don't know which bank. So what I do is I buy, a banking fund which is owned by a mutual fund house. But do you believe then the onus is on me to essentially ensure that I keep tracking the market move, keep watching out for news, etc.? Do you think that there is this increased responsibility of keeping a minute track of the markets and the news flow with respect to that theme, that lies on me?
Absolutely. And obviously, because as I said, it's a tactical allocation, which means it's not something that you're looking at saying that I'm going to just invest and I'm going to forget about it for the next 10 years or anything of that sort. And certainly, whenever you make tactical allocation bets, you need to be tracking and you need to have your exit done right, because otherwise it's not really going to give you great returns. So certainly, yes, that you're going to have to be spending much more time on tracking it than if you were to just invest in one of the other funds like a multi-cap fund.
Would you advise doing, an SIP sort of, investing in a thematic fund? Because that way, time the whole bit of timing the market, at least that pressure is off you when you do an SIP.
Actually, I would say a staggered investment. It may not necessarily be an SIP, but a staggered investment is what you're looking at. Because, honestly, in the long term, I have not seen themes or sectors really play out consistently. And what I've always found is that in any case, at any point in time, the theme that looks to be having the highest potential, or the sector that seems to be having the highest potential, is anyway going to be part of the mainstream funds like multi-cap or mid-cap funds in any case. So, I would rather that you firstly choose the mainstream funds rather than looking at a thematic or a sectoral fund. But even if you are looking at a thematic and sectoral, I would say that, maybe spread out your investment in a couple of tranches, because honestly, it's a real bet that you're making on this particular sector. So I somehow feel a long-term SIP is not going to be the way to go.
Okay, long-term SIP is definitely not the way to invest in a thematic fund. Yes, maybe you can purchase in small quantums, a staggered approach to buying out units in a thematic fund. Remember, that's very different from an SIP. An SIP would involve purchasing units worth a fixed amount every month, as opposed to a staggered investment, which need not necessarily be a uniform time frame of picking up investments or a uniform amount. And again, you need to have deep understanding, deep knowledge as well about the equity markets, or rather about that particular sector. Now, returns are higher. So, Mrin, does that automatically mean that the risk as well that you would be assuming when you will be buying a thematic fund would be higher, and hence you would strictly advise that those individuals who do not, who would be needing the money in the short term should stay away from it?
Really say that, as I said, it's meant for, it's a bet that you're making on this particular theme or sector to work out. So hence it might take some time for that theme to play out. So it needs to be both ways. I mean, if it doesn't play out, then you certainly need to have the patience for it to, to wait for it to play out. And at the same time, do not use it for your core goals. Do not invest into it if you need money after 1 or 2 years. Certainly it's not advised for investment on those situations as well.
Okay, all right. Well, there you have it. That's everything to do with thematic funds. Just before I wrap up this bit of the conversation, Mrin, how would a thematic fund essentially fit into someone's portfolio? If someone is absolutely still convinced, would you believe that they should allot, or budget a fixed amount of their investable surplus and, perhaps stick to that, or don't exceed that limit, maybe say 10% or 15%? What do you reckon?
Yes, I would say that maybe you can keep up to 10% of your portfolio into these tactical allocation bets. And more importantly, if you are considering a thematic or a sectoral fund, do some extra due diligence. So a lot of times people enter into these funds driven by the near-term performance. But I think what you really need to focus on is the theme really sustainable? And what happens, for example, if there is any change, so one of the examples would be this whole, theme that was there around rural economy. And then there was demonetization. And certainly at that point in time, a lot of those stocks were very, very badly impacted. So, can the theme or the sector really sustain in terms of change or global risks and stuff like that? You really need to do a lot of due diligence and limit your exposure to 10% of your entire portfolio.
Just a quick question on thematic passive funds as well. We've been seeing a lot of ETFs, etc., being launched in the thematic category too. Anything that you would like to, make an opinion or comment on that category?
Whether it's active or passive, I would seriously not look at thematic or sectoral. The only difference between the thematic and between the active and the passive funds is really the cost. But the risks remain the same, which is the concentration risk and the fact that these are extremely high risk. Those risk factors actually don't change. What changes is only a cost. So I would rather play a theme or a sector through a broad-based fund where for sure, as I said, the best potential stocks would be present in any case.
Okay, well, great. There you have it. Mrin would advise that individual investors who really firstly don't have time to track the markets, track the news associated with certain themes and sectors on a daily basis, stay away from thematic funds. You can of course play the funds by investing in broad-based funds like your large cap funds, multi-cap funds, small cap funds, so on and so forth, because they will have exposure to some of the biggest themes you're talking about: banking, pharma, IT. Some of the other stocks are always present in these broad-based funds as well. And plus the upside is that even if, let's say, your investment thesis doesn't play out as you envisaged it would, and instead it took a turn for the worse, there are other stocks and sectors as well in that broad-based fund that will help cushion some of that loss. And I think that's the best part about a mutual fund as well. All right, well, let's take on board the questions and queries as well that we've received. Remember, folks, you can write into us on the Money Show at etnow.tv with any questions that you may be having with respect to personal finances, with respect to mutual funds that you have in your portfolio, or even if you're a brand new investor and want to start investing in the equity markets. For now, let's take on board some queries we've already received. First up, we have Santu Mondal writing into us saying that he asks, If the market goes through a sustained rally, the lump sum investor will gain more than the one who staggers investments across several months. Secondly, the SIP investor will also lose if the market rises sharply and then correct. So Santu's question is, should I stop my SIPs then and sit on cash and wait for a fall? Santu's question is pretty valid because, these last 4-5 months, we've been seeing a nice rally come by in the equity markets, which obviously means that SIP investors have been picking up lesser units because the prices have increased. So that's the reason why he believes that maybe I should pause my SIPs and pick up resume SIPs when the market falls. But Mrin, do you think that such minute tracking of up and down of the equity markets is required of mutual fund investors, especially those who are doing SIPs?
Not at all. And in fact, it's impossible to do it again in the long term. Maybe you'll do it once or twice, but honestly, and it's so difficult to catch the bottom or, catch it when it's rising, because when it's at the, when it's falling, then you'll keep thinking it's going to fall more. And when the markets are going up, you're going to keep believing that, okay, the markets are going to fall. So I'll wait for the fall and I'll just wait it out and stuff like that. So it is impossible to really time markets. And, this is one of the things you really can't control. What you can control in your investing is really, are you investing as per your goals? Have you chosen instruments as per your investment holding period? And honestly, then you just hope for the best. But all this minute tracking, getting in, getting out, well, firstly, it's very expensive and you're going to be incurring a lot of transaction charges, not to say the tax incidents. And at the same time, it's very difficult to catch markets at the bottom.
I mean, the idea as well of investing via mutual funds is so that you don't have to micromanage. So just let your SIPs be. And yeah, like Mrin very correctly mentioned, it's virtually impossible really to keep track of what the markets are doing, how they're moving. Sometimes even the doyens of Dalal Street do make mistakes. So, it's but obvious that it's difficult. It's going to be perhaps even more difficult for people who are not so well tuned or well versed or don't have the time to track markets to go wrong. So this is really not a very fruitful exercise. Okay, taking on board our next question coming in from Alok Kumar. He says, I'm currently investing in 5 funds on a monthly basis from Jan 2020. Okay, so there's the Axis Blue Chip where he's put in a 20 grand figure, Mirae Asset Large Cap another 20,000, Axis Mid Cap 15,000, Kotak Emerging Equity 15,000 and SPF Focused Equity 10,000. He has a time horizon of more than 8 years, and he wants to accumulate a corpus of 3.5 crore rupees. He's saying that he is also okay to invest another 40,000 rupees per month additionally, and he wants your advisement where he can deploy this additional 40,000, along with, of course, you checking in on the funds that he already has in his portfolio. It's quite a healthy SIP. He's making every month close to almost 80,000 rupees, if I'm not mistaken, 70,000 rupees. And he wants to add in another 40,000 to this. So firstly, I'm sure Alok must be feeling the pinch because he started investing just before the COVID crisis hit India and the world. And then, of course, he must have seen a sharp fall in his NAV. But I'm sure he must have recovered as well because, especially if he's been consistently kept his SIPs on through the periods of Feb, March, April when we saw the fall in the markets. So Mrin, your word on his current portfolio and the next bunch that he wants to invest.
So couple of things. One is that yes, he's investing a very healthy amount, but in order to reach his goal, he'll really have to look at investing a much larger amount because the goal that he's looking at, when you look at 3.5 crores with inflation after 8 years, it's going to be roughly about 5.5 crores. And the monthly investment required for that is around 3,75,000 rupees. As far as the funds are concerned, I think it's a good mix of large and mid-cap funds that exist. And I would really suggest that he can just add on to these particular funds. I feel, he should not certainly look at adding on another fund, and he can certainly look at investing in these particular funds itself.
Tell you what's All right. Okay. Well, that's of course. Mrin's response coming into Alok Kumar's query. I hope you've taken note of that. Mrin, always appreciate you joining us on the Money Show to, talk about the different topics. Thematic funds, of course, what we would like to talk about today, because we were getting as well a lot of queries about IT funds and pharma funds. Really, they've seen a rip-roaring rally, especially in 2020. So thanks so much, Mrin, for putting forward your view on these. Well, for now, we will take a very short break right here on the show. But when we return, we'll be joined by Paisa Bazaar to talk about the loan recast schemes that banks have slowly started to deliver their policies on. So we'll be analyzing each one of them and whether you should be opting for the loan restructuring that your bank will offer you. Stay tuned.